Hello everyone, this is Jimmy Singh, broker owner of Supermax Realty, 647-961-2639. Welcome to my channel Real Estate Edge with Jimmy Singh. In this short video, I like to talk about fall real estate market in Greater Toronto area, London, Windsor, South Western Ontario. A lot of you have reached in last few days asking about where the market is heading and is it a right time to buy or sell the property. Folks, we have entered busy fall market with higher sales volume, and I have noticed the price still growing in lot of cities. So if I say in Ontario, 13 out of 16 markets have experienced tremendous growth, roughly 20 to 35% appreciation year over year. And the outlook is such with the low supply, that I see in some of the cities, example, Kitchener-Waterloo, I can easily see it going to, 5 to 7% by the end of the year. So right now I'm recording this video 1st of November. So 2 more months are left in this year. But looking at the, crazy supply, I checked last night on our MLS system what is available. So in Brampton, for example, only 252 homes were available. In Mississauga, only 264 freehold properties are available. In Durham, which is Ajax, Pickering, Oshawa, Clarington, only 513 properties are available. In London area, only 281 properties are available. See, sales to active listing ratios is still in seller's territory, and the inventory is historically low. And in next few days, a lot of real estate boards like Toronto, Kitchener-Waterloo, and London will come up with their own stats. But all in all, I see, the prices keep rising, maybe not, surge as much as they have risen in 2021, but prices might again surge in 2022. And most markets, I'm predicting to climb again in the range of 10 to 15% on average with the current state of affairs. And I see, the shortage will still linger into the next year. See, folks, in last 10 to 15 years, if you have noticed in Greater Toronto area or Golden Horseshoe, we have pretty much seen seller market all in all. Exception is 2017 when government implemented some changes. It went, for few months in buyers or, a territory or balanced market. But I always tell my clients, when you invest in real estate for long term, just remember, good cities will bounce back very quickly because there's lots of people moving to bigger city for better employment options. Lot of immigrants are moving, and these fundamental changes, haven't changed much. And another thing I'm noticing right now is lot of people who own the properties, they are selling tight. And mortgage market, yes, interests are still historically low, but still our banks are very prudent, and it is not easy for you to get a bigger mortgage to move up in this tight market. So if as a seller you can't find a new home, some people don't want to go uncertain in this market by selling their house first, right? So it's a good option for you with lower interest to keep your mortgages, paid off faster. So you have equity in your property, and it's not a bad idea. You pull up some of the monies and invest in a rental property for your retirement and for your kids. Most markets I study, especially Greater Toronto area, London, Kitchener-Waterloo, and Windsor, inventory actually is down 30 to 35%. And currently I'm working with, many qualified clients who want to buy today or tomorrow, provided the right property comes on the market. And by and large, I have noticed that market, even with moderate demand, if you let's say go to some counties like Perth County, Oxford County, like even smaller town, they have seen brisk demand. They are seeing bidding wars, and many of these buyers I work with, they envision this trend to continue in future, especially 2022, and they are concerned once the immigration starts to open. They just want to rush and acquire their properties before the price rises further. Another thing I like to talk about is first sign I see in the marketplace that the market is slowing down is the failed appraisals. Appraisals are when banks send the person to appraise your property to see how much they can lend you, and values right now are coming very strong. In 2019 market, 17 market, especially May, June, July, when market suddenly slowed down, appraisals were failing consistently. So I noticed that time people who are just speculating, they got stuck. Why? Because appraisals start coming 5 to 10% below what they actually paid for. So you can go and read some articles in Toronto Star from 2017 market that people even bought builders home, and at the closing the appraisals were not coming. But these things are not happening right now in marketplace. In 2017, some buyers who got stuck with limited monies in their pocket, they refused to close, and then they get sued by the builder, and then obviously it was a big drag on their financial health. But right now in this rapidly rising market, yes, these things can happen, but so far only very small difference I see in valuations, because most of our listings, or when I work with buyers, bank do appraise the properties, and I ask them how the appraisal come. Most of them are actually coming close to the asking price. Another thing, guys, I always talk is, all the government band aid policies, whatever the policies they put to artificially suppress the demand, they are not effective anymore. They try to put a lot of taxes. They try to put, stress test. All those are not helping. The issue can only be solved by the federal government when they, collaborate with local municipal government to make sure, all those are working, together to create extra supply in the marketplace. For example, they say population of Greater Toronto area is expected to grow 2.27 million people over the next 10 years. And recently there was a report that Minister of Transport along with Government of Ontario are taking steps to encourage cities to put high density mixed use development near the transit. So that way, they can boost the housing supply and increase the ridership. And a month ago, they start, a train from Union Station to London for the same purpose, to reduce the congestion on the street, at the same time to boost the economy. The biggest, challenge I see in a lot of cities, including Toronto, is what we call NIMBYism. NIMBYism means not in my backyard kind of feel of lot of neighbors. They don't want new apartment buildings to be built. They don't want new affordable units to come in their, expensive neighborhood, because they believe it will decrease the value, right? But if you go to Square One area within 2 kilometer radius, 1 kilometer radius, you can find detached houses, semis, townhouses, or buildings without making much impact in their pricing. That's how the big cities always grow, right? The challenge is most of the city councillors I see, they don't want any change in their neighborhood where they live, and they want everything to remain the same forever, right? And what's happening is it will dictate the city's housing policies, right? So if basically you just vote against any kind of development in your neighborhood, whether they're proposing, rentals, affordable housing, or private housing with, multi-story units or mid size building, and, it's not going to help your cause. all the people, influx of people coming in bigger cities, they are, stuck in the basement apartments or renting all their life. And recently there was a research done by Smart Prosperity Institute. They said in Ontario, in next 10 years, need 910,000 new home units to satisfy the demand. And obviously, if you drive around in the Greater Toronto area, Golden Horseshoe, Niagara Falls, London, Hamilton, Woodstock, there's plenty of space still available. There's plenty of space available in around the GTA for intensification. We shouldn't be, scared of the growth. Yes, there are certain things government could have done better, especially the transit, but inclusionary zoning, old kind of zoning has to be changed. Lot of, if you go to Etobicoke, you go to certain cities where there's old property sitting on 60 feet by 120 lots. Those houses are pre-World War or after First or Second World War when people came, those houses were built. But then again, they are not helping any cause. Lot of houses, kids have moved away from parents and only one or two people are living. Government can easily give them subsidies to add rental unit to offset the housing cost for a lot of people who are retiring with, current inflation. And last night, I was talking to one of my friends regarding inflation. I said a can of Campbell's soup was 10 cents the year I was born. Right now, if you go the same soup of Campbell, you can buy for like $1.50. That's what inflation do to the money. And inflation certainly, friends, is driving the demand of housing because homes or real estate are time-tested hedge against declining purchasing power. Because your money in the saving account in the bank, they are losing the value. And buyers and investors are putting them in their homes or investment properties or maybe stock market or dividend paying stocks, to keep up with the inflation, which is probably sitting at 4.5% as of now. Again, guys, I don't like to make too much bold predictions, but the way things are, we can only see the trends happening in the marketplace and inform the public. But with the rise in inflation, the way the money is being printed, and I see many buyers and institutional investors investing big time in real estate, locking their investments with a low interest rate. And another news that I was listening to in the radio yesterday was the dairy farmers said they will be getting 8.4% more for the milk and 12% more for the butter starting in February 2022. And don't be surprised by the end of this year if you see yogurt and all those products getting more expensive by the year end. So this is what inflation does, friends, right? So again, as a savvy buyer or a seller, it's very hard to time the market. It's always about time in the market, not timing the market. And as I said, some of the buyers I work in the bigger cities, they're looking to relocate or downsize in smaller cities like Windsor, London, Oxford County, Perth County. They just buy a secondary homes. At the same time, they are not selling their houses in their bigger cities because they are scared once they move out and sell their property, they will be never able to afford the same house again, right? So keep all these factors in mind why people are holding on to their properties. They are not selling because of fear that their kids will be out of the housing market in bigger cities forever. So some people who can afford to, they just refinance, move to a smaller city, and keep holding on their existing houses. And as far as the city goes, city people, they have to again look at their official, zoning plans and see, what is more reflective of present housing situation. And the plan definitely must allow for more mix of housing, stacked townhomes, mid-size apartment buildings or condominiums, and especially permit new housing near transit. I'm a big believer in that, right? So that they can make Ontario the best place to live, work and raise the family. And now let's talk about what's happening in the crazy rental market. And everybody knows that there is a rent freeze in Ontario, which will be lifted by the end of the year. And certainly the landlords, holding cost has gone up. And I have a bunch of rental properties. I haven't risen my rents during pandemic, and some of the rents I haven't even increased in 5-6 years. But what I'm thinking is, once I noticed this year is a lot of investors I work, 60-70% in condo market space and all, they actually, made profit in last 6-7 years with their house pricing. So they have sold their properties, took the money away. And I can say, let's say 10 condos were sold in Toronto, probably 6 or 7 were bought by the end users, meaning those condos won't be available in the rental pool anymore, and it will put more pressure on the rental amount, right? But next year they can increase the rent again if as per the consumer price index set by the government, which is 1.2% for 2022. But if the condo or house is built after November of 2018, they can increase more. So always be considerate of your tenants, see what their financial situation and work with it. But all in all, I see, once the borders open up, once more foreign workers come and, out of province people come back to bigger cities like Toronto, Mississauga, Brampton, and even Kitchener-Waterloo, which is doing very well in IT sector, or university towns like London, where there's tremendous opportunity in healthcare as well. I see kind of, spring coil effect, where because of the lack of good quality rentals and lift of rental freeze, landlords will have free hand increasing the rents. So, typically I increase my rents when the tenant moved out of my property. Then I see what's happening in the marketplace. I set rent accordingly. So all in all, market is still very tight, and things are not looking very rosy for buyers heading to 2022. So if you are in the marketplace, you have 6-7 months of saving, you have a stable job, not many debts, it's a good time to invest in a property, and think long term. Don't look at speculation, because I can't predict how 2022 market can be. It can be volatile because we have seen pretty good run in last few years. We have seen prices gone up in London, for example, close to 30% this year in 2021. And obviously these are not sustainable. So even in next year, market calms down, and in some secondary markets, prices might go down 5-7%. But still, if you're holding the property for long term, it won't make much of a difference. Again, thanks for watching my video, guys. This is Jimmy Singh, broker of record for Supermax Realty. If you're a brand new agent looking to get a license, don't know how to start, or you're a newer agent looking to join a brokerage to sell real estate in Greater Toronto Area, Golden Horseshoe, London, Kitchener-Waterloo, Windsor, give me a call for a private consultation. My number is 647-961-2639. Or if you're in the market to buy, sell, or invest, reach out to me via my website, supermaxrealty.ca. Thanks for watching, guys. This is Jimmy Singh. God bless you all.